So the next section will be pretty straightforward. We're going to look at each candlestick pattern, say how it's used, and then we're going to run the pattern on the data to see how it performs. For this, I'll be conducting 2 tests on historical data, and I'll be using my backtesting platform AmiBroker. AmiBroker is an affordable, flexible and powerful simulator that is perfect for testing these trading patterns. The first test will be run on a selection of 21 different futures and forex markets between the 1st of January 2000 and the 1st of January 2016. This test will be run on daily data, and we will be analysing the performance of each pattern based on a holding period of 1, 3, 5 and 10 days. So here you can see a list of the 21 different markets we're going to look at in test 1. We've got a range of stock index futures, commodity futures, bonds and currencies. And this data is all coming from Norgate's premium data, which is imported directly into the backtesting program AmiBroker. Some of you will know that futures trade in separate 3-month contracts, and the data requires a bit of work in order to make it suitable for backtesting purposes. And the futures data we're using here from Norgate is back-adjusted continuous contracts, meaning that each contract has been adjusted backwards in order for us to test it under realistic conditions. It should be interesting to compare how well the candlesticks perform on the stock indices versus the currency pairs and the commodities, and if there's any real difference. Now the second test we're going to run will be exactly the same, but we're only going to run it on stocks, and we're going to focus on the S&P 100 universe of stocks. Again, this data comes from Norgate premium data, and it's survivorship bias free because it contains delisted securities and it's been amended for historical actions. That means that the total number of stocks in our watch list will actually be over 100, and in fact it's going to be closer to 200. So the first test will show us how the candlestick patterns have performed on a variety of different futures and forex pairs over 1, 3, 5 and 10 days. And then the second test will show us how the candlestick patterns have performed on S&P 100 stocks. And remember that S&P 100 stocks are some of the largest, most liquid companies in the US. So let's take a look now at how the results are going to be presented from these tests. So here's an example of what we're going to be looking at. The first table on the left is going to show the results on each of our 21 different markets with a 1-day holding period, while the table on the right will show the results with a 3-day holding period. And for each market we're choosing to show 3 things: the number of trades, the average profit and loss per trade, and the percentage win rate. The results from each market will be listed individually, and then the averages will be shown at the bottom. So in this example, imagine that we just run a simulation where we bought the market after a particular candlestick pattern. The results indicate that with a 1-day holding period, the candlestick pattern worked best on sugar. The pattern produced 137 long trades in total, with an average profit of 0.32% per trade and a win rate of 59%. This is over the sample period between 2000 and 2016. And then you can see that the next best performing market was corn, followed by silver. For the most part though, we're actually going to be looking at the averages. So here you can see that across all of our 21 markets, the average result from the pattern was a profit of only 0.03%, with a win rate of 51%. Directly underneath these numbers, you will see our benchmark figures, which we can then use to compare our results. And these benchmark numbers simply represent the 1-day return of every market combined, before any pattern or selective buy rule was applied. So here the average 1-day return across all of our 21 markets was 0.01% per trade. Underneath these numbers we then have the results for our stock universe, our test 2 results. So in this example you can see that across the S&P 100 universe of stocks, the average result from buying this particular candlestick pattern and holding for 1 day was a profit of 0.09% per trade, with an average win rate of 50%. Again, we have the benchmark result underneath, which we can compare our findings to. So this shows that the average profit from holding an S&P 100 stock for one day is 0.04% per trade. And remember, these results are all before trading costs. So those are the results for a one-day holding period. We'll then look at the results for a 3-day holding period shown on the right. And then after that, we're going to look at 5 days and 10 days. And that's basically how we're going to present the results of this study into candlesticks. These tests should give us plenty of data to analyze. And after we're done, we should be able to look back and see which candlestick patterns are the best and which candlestick patterns we need to forget. So let's dive in now and get started with the first candlestick pattern.